So again, we just looked at how to properly purchase our inventory, and now we looked at how to properly journalize our purchase returns and allowances as well as our discounts. Now we're actually going to introduce you to the costing method, all right? And we're going to be looking at the first one, which is going to be Fifo, which I'll explain exactly what this means. So again, costing methods, right? So there's going to be a total of 3 costing methods that I will be teaching you in periodic inventory, okay? And the last one, which I'll talk about briefly, okay? So let's start for the first one. The first one's going to be first in, first out rule, meaning the first batch that you purchase is going to be the first batch that you sell first, right? So with that concept, right, typical stores that would sell this kind of idea would be a grocery store, right? Example, because perishable goods, right? If you're buying them in batches, first off, the rule of thumb here is those have expiration dates. You're definitely not going to pre-purchasing these batches and selling out the first one, the last ones that you bought. You're not going to sell the freshest ones right away. You're going to sell whatever's expired first. So in this case, grocery stores are more commonly used it because they sell it for the sense of perishable foods, right? Things that expire. Anything that has an expiration date, they tend to put them in the front so they can get rid of it quicker. Okay. The second costing method is going to be last in, first out, meaning it doesn't matter when they buy the patches. They're going to be releasing the most recent batch first. So in this case, most often you will see would be a typical cell phone business, right? Or a laptop, for example, okay? And with that being said, right, it's for things that have a longer shelf life or tend to, for example, cell phones, right? If the latest model comes out, you're still selling the older models. However, you're selling both of them at the same time. When the new phone drops out, you're expected that your sales are going to skyrocket, and all the newer models are going to be repurchased first, right? But essentially, you're still ending up selling the last batch. It's just very, very slow at that point, okay? So that would be an example there. Or any household items, household appliances, or anything like that would be considered things that you could purchase, and because they don't have an expiration date, it doesn't really matter when you sell it, right? As long as you stock it on the shelf and it gets sold. So it doesn't matter at that point, okay? The third type of costing method is going to be called weighted average, okay? When we dive into perpetual, you'll notice that it's the same thing as moving average. But the difference between the two is obviously moving average, right? We're not going to be updating our inventory as often. So we'll explore that another day. But we're focusing on weighted average. And in this case, I chose water bottle, right? So water. It's a resource that everybody needs, and it's always in demand, right? You're always going to be constantly making those purchases over and over and over because that's a resource that a lot of consumers purchase, and they purchase it on the daily. So in this case, it doesn't matter if you purchase them first, purchase them last. We're going to just group them all together. And we're just going to spread the cost evenly amongst every single item and just cost it as if whatever average cost it's going to give you. And this will make more sense when we actually learn the lesson and actually compute. Excuse my English. When we do the computations for weighted average, we're going to see how it doesn't matter when we sell it, when we purchase it or anything. We're all just going to bundle up our total amount of items that we have, and we're going to spread them across our total cost. Okay? And then the last one that we should know about is specific ID. Okay? And the best way to describe a specific ID is if you were looking at a car auto repair store. Okay? Because what it is the inventory. It's not going to be a one-size-fit-all kind of scenario, right? In this case, they don't know what car is going to come in. They need to, let's say a car needs to get repaired and it needs a specific part. So that's why it's called specific ID, because you're going to be this specific part you have to order, right? It's going to be based on 1, the car model, 2, what year the car model is, 3, the manufacturing company, and lastly, 4th is going to be the actual component that belongs to the car. So again, a water pump or a water pump in your car, it's not going to fit all single cars, manufacturers, anything like that. But they do have the generic aftermarket brands out there, right, for lower and cheaper costs. But in this case, you generally want to make sure when you go to a repair shop that they buy you the exact item for your exact car, okay? So that's what specific ID is going to entail. It's going to be usually an indicator of a specific ID item or inventory is it's going to have a serial number on it, okay? And usually that's going to be determined as a specific ID. It's going to be a one piece that is a special item for the customer, okay? But in this case, we don't have time to look into it because the other 3 are more relevant to a retail perspective or a merchandising perspective because, again, maybe you are planning to open up a grocery store or maybe you're planning to open up a clothing store, right? All of the other 3 apply more towards where specific ID is kind of like you need to do a lot of research and you need to be able to do the proper research before understanding how specific ID works, okay? So in this class, we're only going to learn 3. But don't mistaken that specific ID does exist and it is a costing method, okay? But again, we're focusing on one at a time and we're going to start off with the first in, first out method, okay? So here we're going to be looking at these 5 components, especially when we're dealing with periodic inventory, okay? We're going to be looking at number 1 is what is our purchase price? And that's going to be your quantity multiply the unit price to get your total purchase price, right? Second thing is you're going to calculate is your total cost, which again, we've done before, is by taking your purchase price and you're going to add your freight cost or whatever expenses to get your grand total of the amount for your item. And then you're going to calculate a cost per item. Now what this is again, it's all the costs that's associated to get your assets to your store. So, and in this case, as a retail person, you want to create a selling price that's going to include the cost of the asset, right? The cost of the item, which includes every single cost, again, because you don't want to actually have to pay to sell your item, right? You want to make sure that the customer pays you for the full amount and you get a profit on top of that. So that's what a cost per item does. It's going to be a total cost divided by your total, divided by your quantity, all right? Then this section right here where we talk about cost of goods, the goods available, all right? And this is going to only apply if you have beginning inventory. So when we move on to the actual table, you'll understand where this formula comes from. All right. So in this case, our goods available is going to be our beginning inventory plus our net purchases. All right. And then our cost of goods sold is going to be our net purchases minus ending inventory. And that's how you get your cost of goods sold. Okay. So one key factor, again, that I told you guys about periodic inventory is that when you're dealing in a scenario, at the end of a given period, you're going to have someone go physically down to the warehouse or go down to the basement and tell you that they physically took account of the inventory and you have X amount of units on hand. So ending inventory should be given at all times. So you don't need to calculate ending inventory unless you're given how many items you sold, okay? But in this case, you're more likely to get someone to go down to the basement and tell you how much inventory you actually have on hand, okay? So here's the scenario here. We got June 1st. You made a purchase of 100 toys at $1.25 each with the freight of $25. Then on June 11, you also made another purchase of 100 toys at $1.28 with freight of $26. And then lastly, on June 15, you should have a total of 80 toys left in inventory. Okay? So that's just this information given to us here. Now, how to properly journalize, which we've already learned. You're going to recognize your purchase expense and your freight expense for the very first scenario, so June 1st, and I'm going to recognize it for a grand total of $150. Okay? Now, this is us placing it into the journal. What we're going to be learning is we're going to be introducing you to the inventory worksheet. So, when we apply plug in our information in the inventory worksheet, you don't need to sit there and calculate your amount in your journal. What you can do is you lay down your foundation. You know that you're going to incur a purchase expense. You know you're going to incur a freight expense. And you know it's going to be on an account. And what you're going to do is, instead of calculating twice, you're going to go to your inventory worksheet, figure out what the total cost is, and then go back to your journal and fill out the rest of the information. Okay? So again, you don't need to calculate this twice. You can just eliminate the extra calculations and just do it in one place. So in this case, again, June 1st, right? I made a purchase of 100 items at $1.25 each, and my freight was $1.25. So in my table, I have my date, I have the quantity, I have my unit price, and I'm given my freight. So in this case, to solve for purchase price, which is the quantity times the unit price, which gives me a total of what? Well, 125. Right. Okay. And then we've done this before. What's my total cost going to be? Okay.
150.
It's going to be your purchase price plus your freight, which gives you 150. Now here's what's different. Now you're going to have to calculate your cost per item. So in this case, it's going to be my total cost divided by my quantity, which it gives me what? It's going to give me $1.50. And this is going to be the price that I'm going to cost. So this is what's going to cost me to sell one of these items. Okay? It's going to cost me $1.50 to sell one of these 100 items. Okay? So here's scenario 2, journalizing it. But with that, again, we're going to notice that we're going to be plugging in the numbers here. 128 as our purchase price for June 11. And our total cost is going to give us a total of 154, which gives us $1.54 for each item that we sell. Now, let's review this information real quick. We have a total of 2 batches, right? We have our first batch that's going to cost me $1.50 to sell. And then we have our second batch, which is going to cost me $1.54 to sell. Okay? So first rule of thumb is we're going to calculate our grand total of how much we actually have available to sell. So in this case, I tally up my total in each column, except for my unit price and my cost per item. Okay, so in this case, I have a grand total of 200 items to sell, and it's going to cost me a grand total of $253, right, without the freight. I'm going to add my additional freight, which is $51, giving me a grand total cost of $304. Now, me calculating these four numbers, I'm going to apply it to my second portion of the table, which we'll look at when we look at our inventory worksheet to begin with. And it's going to look, this is the bottom half of the worksheet. So this is where I'm going to calculate my total net purchases as well as my goods available. Okay, so here I recognize that my net purchases, right? What's my quantity? I already solved it from my calculation above, right? It was for $253 for just the purchases alone. We do not have any purchase returns or allowances because that decreases our inventory, right? That decreases the amount that we originally purchased. And in this case, we won't look into it until we reach our chapter 6 exercises, okay? So here we're not going to calculate it. We're going to assume that we didn't have any returns or allowances. Okay, so 0 here and 0 there, bringing us down to our subtotal of 200 items at $253. Okay, then we're going to add our freight. Freight does not increase the quantity, it only increases the value. So I have 0 here, and I'm going to add them together to give me a grand total of 200 items, but if I add my 253 plus my $51, it will give me a grand total of my $304, which we actually solved from above, right? So this is what is going to help us make sure that we're doing our accounting correctly, right? Making sure that our numbers match one on one, okay? So that's here, we matched everything there, okay? Then we're going to bring it down to here. Again, if you have beginning inventory, then you can go ahead and apply the formula for the goods available. But in this case, we do not have beginning inventory. So my goods available is just going to be my total net purchases, which I solved from above. And knowing that my ending balance is going to be 80 items, which we know because that's what the scenario said. On June 15, you had a total of 80 items left in inventory. So now this is where we're going to start calculating our cost of goods sold, okay? If I started out, or if I had an originally 200 items, right? And I now find out that I only have 80 left. How many items did I sell?
120.
You sold 120 items. Okay, now this is where we're actually going to start applying our costing method. So now we're going to solve for the cost of my cost of goods sold. So this is where I'm going to make my calculations and apply it to my inventory on hand. Okay, so here's my inventory right here. I have 2 batches. I have my first batch of 100 and my second batch of 100, right? First one starting at 150, second one starting at 154. Now, by looking at this concept, right, and we're looking at first in, first out, which batch are we going to be utilizing first?
First in, first out.
Mm-hmm.
The ones that cost the 150.
Yes, because of course, like when we look into our actual inventory worksheet, we're gonna have the dates there. So in this case, that was the first thing that I bought. Right? That's the first thing I bought on June 1st or something like that. Right? And then the second one was on June 10 or June 11th. So in this case, so my first batch that I originally bought was for the first 100 that cost me $1.50. So what I'm going to do is, because I'm doing cost of goods sold, that's going to be the first batch I sell. Okay? And I understand that I need to sell a total of 120. So by noting that I got rid of my first batch, I know that I need to have my second batch. So my second batch here is I need to take 20 out of the 100 in my second batch. So in this case, I am not taking the whole amount. So I need to calculate the cost. I need to calculate the total cost by multiplying my quantity times my cost per item. And in this case, I know that my cost per item is going to be $1.54. So by taking my 20 items and I multiply it by $1.54, I'm going to get a grand total of $30.80. And if I add that to my original 100 that I sold already, I'm going to get a grand total of $180.80. All right, and there is where I place it here. Okay. Now, how do I solve for my ending inventory?
So you have to change the quantity of 100 to 80 now, right?
Yes, okay. But how am I going to solve for my ending inventory?
You're gonna take the 304 and subtract the 180 from it.
Okay. Good. There are two ways to solve for ending inventory. So, Robin, I think you were trying to get to this part right here. You said change the 100 to 80, right?
Right.
If I do it that way, yes, I can solve for ending inventory that way as well. I could take my 80 units, multiply it by the cost per item to get me a grand total of $123.20. That's going to be left in my inventory. Or I can do what Michelle said. Since I already know what my total amount that I have available to sell, I'm going to subtract my total amount that I've already sold, and I'm going to get a remainder of $123.20. So either or, whatever makes sense to you. This I would generally do the ending inventory. I would take the total amount that I had available and subtract the total cost of goods sold. At least with that, I don't have to run into any errors when it comes to them not matching up, because at the end of the day, if your ending inventory, if this number is a rounded number or a non-rounded number, you can be off by a couple pennies. It's faster if you can already mentally picture this. Understanding how to solve for ending inventory, you'd be able to solve it by taking 80 items, because you know that's how many left you have on hand. Knowing that it's coming from the last batch, right, because you did first in, first out, you know the first items are going to be sold, or the first batch is going to be sold. So knowing that, you could calculate your ending inventory by taking your actual quantity, multiplying it by the unit cost or cost per item, right? Either or, we end up getting the same answer of 123.20, and that's how you solve for FIFO, right? Any questions in regards to this concept? Okay. So again, notice when we did our calculations, we took our first 100 for 150. We took 20 units for $1.54 to get us a grand total of $180.80. And then notice at the end of your inventory, you should have 80 units left, and it's going to be for a grand total of $123.20. Now, with this piece of information that you have been completed as far as the second portion of your inventory worksheet, this is where I need to introduce you to the conversion entry. Okay? So again, at the end of your inventory, our items are still considered a purchase expense. We haven't placed them into inventory yet. So this is where this is becoming an adjustment entry. At the end of the period, this is where you're going to need a conversion entry to convert your purchase expense and convert them into inventory. Now, with that being said, why didn't we do this in the beginning of the beginning of the period? It just depends on your company. Now, again, having to deal with an additional journal entry, it only makes sense to just do it this way, because what's the point of doing your inventory worksheet? You're actually completing and solving this information right here, right? And we know that when we made our purchase of inventory, that doesn't mean we're going to have our 200 items available in the purchase expense, right? Because we've sold some along the way. So this is where we're going to be calculating. So when we pull up that bottom portion of the table, again, we're going to be looking at these components, right? What was our ending inventory? And that's going to be for $123.20, which we solved already. Boom. We're going to look at our cost of goods sold. We already know what that is, right? It was $180.80, which we've already solved for. Boom. And our purchase expense, we've already solved that by calculating our net purchases, right? This is going to be for $253 because that's what we originally purchased it for. And then, of course, we include our freight separately. So our freight here was for $51, which we've already solved for in the table. So the purpose of having the table completely done is for you to make sure that when you do convert it into inventory at the end of the day, this is where all the answers come into play. They're simply a plug-in formula. So again, because inventory, right, it's an asset. So we're going to increase our assets by our ending inventory. And then, of course, cost of goods sold is an expense. We got rid of those items, so therefore we need to debit the account. All right? And because we're moving from a purchase expense to inventory, we're essentially zeroing out the accounts in our purchase expense and our freight expense. And if they were originally debited, in order to zero them out or to cancel them out, how do we do that? We would just credit the account for the same exact amount to get to zero. Okay? Does this portion make sense? Yes. Okay? Now that we have beginning inventory, or now that we're going to talk about the next section, which is beginning inventory, right? So from our previous example, right, we know that our ending inventory was for $123.20, and we had 80 toys available. So in this case, new scenario over here says that as of June 15, you should have an ending inventory that of $80, and it should cost you a total of $123.20. So with this concept, right, when we have beginning inventory, what we're essentially doing is we're just continuing the cycle over again. But this time, we have a beginning inventory, right? This is what's going to be left in our inventory, because this is what we start off with, all right? And then here on the June 18, we made another purchase. June 23rd, we made another purchase. That should say 23rd. And then on June 30th, which is the end of our given cycle or end of a period, we should have a total of 60 items left. Okay? So I'm going to plug in all my information again. So now here's the question here. What happened to my beginning inventory? All right. Now, looking at the table here that's given here, this section right here is only for your purchase expenses only. When we look at the full inventory worksheet, you're going to get this section as your left side, and then you're going to have another column on the right side that's going to say inventory on hand. And that is where you're going to actually place your inventory on hand over there. Your beginning inventory will reside there. But in this case, this is only focusing on our purchase expense, which we've already went through, right? We made a purchase on the 18th and a purchase on the 23rd. And I've already filled in the calculations for you. So I have an additional 200 items at 257 plus my freight of 51 to give me now a new purchase grand total of 308. Okay, and here on the right side for the cost per item, I've already solved and calculated for you. It should be $1.52 for the first batch, and then the second batch is going to be $1.56. Okay. So then now we're introduced to the second half again, right? We're going to plug in our information from our table from above, from our purchase expenses to get a grand total of our net purchases. Okay, so I should have 200 items giving me a grand total of $308. All right, and then now here we're going to be looking at beginning inventory, which we do have. It's going to be for 80 units at $123.20, which again we pulled from our previous scenario, from our previous worksheet. Okay, I'm going to add my new purchases, right? To give me a total of now available goods to sell is going to give me a grand total of 280 items, costing me a grand total of $431.20. Okay? And because I'm given this piece of information with the ending inventory on June 30th, I know that my ending inventory needs to be 60.
Sorry, I can't hear you.
All right. So my ending inventory is going to be 60. Okay? Right? From my scenario from above, right? It said that on June 30th, I should have 60 items left on hand. All right? With my simple calculation to solve for cost of goods sold, I took my available goods and I subtracted my ending balance, which gave me a total of 220 items to sell. All right? Then flip and we're going to move on to the right side of the table. This is where I'm going to start calculating my cost of goods sold. Because I have beginning inventory, right? That is pretty much my inventory that I have as of June 15. So this batch is going to be considered the first batch that I have. Okay? My second batch that I made with my new purchases is going to be for the 100 items, which is going to cost me $1.52 to sell. And then my third batch, or my second batch that I purchased, right, my second new batch is going to be for my 100 items. So the 23rd, my 100 items that I've already calculated to be $1.56. So with this little table here, with my inventory here, I know that when I actually start selling my items, I'm going to start from the top, right? So in this case, to understand it, you're going to start from the top and make your way down to the bottom. So in this case, I sold my first 80 items for $1.54. okay? But that's only 80 items. I need to get to 220. So in this case, I know I need to sell the next batch, which is I'm going to eliminate the second batch of for the full 100 items. Because in this case, I need to sell 220, and if I sell additional 100, that's only give me a total of 180. So I need to get rid of this entire second batch, which I know I don't need to calculate it because I know that whole entire batch is going to cost me $152. Okay, so I don't need to calculate there. And then lastly, because I only am at 180, how many more items do I need to sell in order to reach 220? And in this case, my answer is going to be 40. Okay? And because I'm dealing with 40, and I know I am not going to take the whole entire batch, I need to calculate using the cost per item, right? I need to tell me how much 40 of those items is going to cost me in grand total. So I took my 40, I'm going to multiply it by my $1.56 to give me a grand total of $62.40. I add up all three costs, and I get a grand total of my $337.60. Okay? All right. And then lastly, my ending inventory, right? It's going to reflect the the 60 items that I have on my inventory, which I know was $1.56. So that's going to give me a grand total of $93.60, right? And I can do the same thing by subtracting it out of my total amount of $431, right? And I subtract my 337.60. I'm going to get my remainder of $93.60. Okay? So that's how you calculate FIFO when you have beginning inventory. All right? Any questions on how to calculate this? Again, tomorrow we're going to take the first couple hours to just go through the, not couple hours, sorry, first hour to go through the example. Okay? Okay? All right. Okay. whatever you want to do. Okay? So good. So once we've done this, right? Again, we've reached the end of our inventory. We made new purchases of inventory and we had a remaining balance. So now we need to complete again our second conversion entry for the end of June. Okay, so in this case, that's supposed to say June 30th, not June 15th. So June 30th, right, we're going to recognize that we have toys ending, all right? Now, in parentheses, I placed it there so you can indicate which type of inventory or which part of the inventory belongs in which section, okay? So in this case, my ending inventory, right, I'm going to transfer my new piece of purchases that I've bought, and I'm going to transfer it into my new inventory account because that's the ending balance, okay? I'm also going to recognize the amount of items I actually sold, okay? So in this case, I know what my ending balance is, right? It was for $93.60. And my cost of goods sold was $337.60. Okay? Now, what about my new purchases, right? My new purchases is going to be for my $257, and it's also going to be for my freight expense, which was $51. Now, the last thing I need to include is because I had beginning inventory. If you didn't have this beginning inventory, you're going to find a discrepancy. You're going to find that your journal did not balance. So in this case, we need to also include our beginning inventory because essentially we sold our beginning inventory, right? And in order to sell our beginning inventory, we need to essentially get rid of my beginning inventory. And in order to adjust inventory, right, we would credit our accounts. So in this case, my beginning inventory, which was $123.20, we went ahead and sold that portion already, and we're only transferring the new items that were left from this scenario, which was the 60 items left in our inventory. So in this case, now our journals match 100%, right? Our debits reflect my total credits here. Okay? So any questions in regards to chapter 5.3?
Nothing for you yet.
Okay? So here's the chapter review. Okay? So again, we've looked at how to journalize our purchases. We also looked at how to do our conversion entry, which is going to be inventory, cost of goods sold, and then zeroing out my purchase expense and my freight expense. Okay? All right. And that is it for 5.3. Okay? Okay.